I believe maybe unprecedented. You're down. Talk about capitulation. Let's take a look at P&G. All right, this is going to say everything. P&G is now down 25%.
Oh, well, if that's true, if that stock is there, you just go and buy it. That can't be there. That is not a real price.
That stock was down 2%.
Well, just go buy Procter.
All right, this is an unprecedented.
Just go buy Procter & Gamble. They reported a decent quarter.
Is there a hedge fund that is liquidating? Is there a distressed seller?
A 49.25 bid for 50,000 Procter if I were at my hedge fund. I mean, this is a good opportunity.
They were just taking that point. I mean, that's an incredible. I mean, that name. Nothing has changed for Procter & Gamble in the past 4 minutes.
When I looked at it, it was at 61. I'm not that interested in it. It's at 47. Well, that's a different security entirely. So what you have to do, though, you have to use limit orders because Procter just jumped 7 points. I said I liked it at 49. So I mean, you got to be careful. When Rick Santelli was saying, look, this is a dangerous market. What I am saying is you put in a 49 bid for 200 shares of Procter. If you get hit, fine. This is very much 1987 like, a little different from 2007 like. So in 1987 there was a breakdown where Procter goes from say 50 to 12. All right. And you want to be there at 13. I mean,
wait, look at it.
It's a fast market. Yes. It's a fast market.
The market was down 900 points. We're now down 688.
So remember, I buy 50,049. I now flip it at 59. I just made 500 G's. I mean, you got to be very careful here.
Somebody just made.
The guy watched the show. He bid 50. He bid for 50. So again, use limit orders. And, pick among stocks. And we just jumped 300 points, so that kind of golden opportunity left.
Because when we saw the Procter and you said buy it, and somebody did. And by the way, let's find out who that was, because that's going to be one darn incredible story.
That guy owes me a lot. I like dinner tonight at Roots.
Scott, what other names, what are they saying at the P&G Post?
No, I just grabbed Peter Costa down here because, again, as you're walking around here trying to figure out how the market in such a short period of time took such a big leg down, Peter, that had all the makings of the capitulation that we talk about that we're perhaps looking for in this kind of a downward move.
Well, you know what it is? It's a capitulation with no bid side. I mean, there's nothing, you have a void in stocks points down. So that's why the market traded the way it was. All the buyers that were in the market earlier today, gone. Anybody who had any interest in buying anything, gone. Everybody's now on the sell side, selling it out, no bid side. And the next thing you know, we're down 500. We went down almost 600 points.
No, we were down 900 points plus in total. We dipped below 10,000 again.
Right.
I might add, we had a very nice bounce off of the worst levels. Does that tell you anything?
That just tells me that now there's bargain hunters. Everyone's still saying, you know what, let's see if we can make some money here. Or there might have been guys shorting it on the way down. It's, who knows? The one thing we can say, though, is we have a very large volume, which in any kind of market move is a sign of a major move. We're at 1.6 billion or 1.5 billion here, and it's only 3 o'clock. I mean, that's a lot.
Okay.
So we have some serious volume.
You're going to be a busy man at the close. I'll let you go. Guys, I'll send it back to you. And take a look, by the way, at the total volume, and certainly the down volume versus the up volume. It tells quite a story about what's happening down here. Aaron?
That's fabulous. Okay, now I got it. Let's pull P&G back up. All right, it was down, what, 23%. Then 4 minutes later, it was down 24%. Then we made that comment of that is absurd. What is?
I mean, the machines obviously broke. The system broke down. I mean, it broke down. We'll have a big investigation.
But now it may possibly go. But there should be an investigation because
there should be. That's why I say this is like there was a 1984 episode like this, a 1985 episode where the machines broke. You got your opportunity. That Monday the machines broke in '87. It's too bad. The system obviously broke down when it went down 400. We're going to find out that there was a glitch in the tape. The machines failed. We should talk to Duncan Niederauer. Find out what happened.
Let me just say though. I took P&G as an example. Yeah, I mean, I'm not trying to say that was the only one that happened with.
Right, but now we'll have a big investigation, the special system, whatever. I mean, here's what I'm saying, is that you go and you no, come on, it obviously broke down. It obviously broke down. No, the market didn't work. It broke down. The machines broke down. That's what happens. Procter was never at 47.
Maybe the specialist never stepped in as the buyer of last resort like they're supposed to?
Procter was never at 47. Or if it was at 47, it was for a blink of the eye and one of these fast pool traders got it. I would urge people at home, as we go down again, obviously that down 1,000 level was kind of a moment of great opportunity. But look for stocks that were yielding 2% that are now yielding 5-6% in an hour's time. That's where the opportunity comes in because we're getting the same kind of bounce off for accidental high yields that we got in 2007, which was indeed the worst case scenario.
It's going to crash and it's going to fall pretty hard because markets are ruled right now by fear. Investors and the big money, the smart money, I'm talking about the big funds, the hedge funds, the institutions, they don't buy this rescue plan. They basically, they know the market is toast. They know the stock market is finished. The euro, as far as they're concerned, they don't really care. They're moving their money away to safer assets, like treasury bonds, 30-year bonds, and the U.S. dollar. So it's not going to work.
We keep hearing that whatever the politicians are suggesting, and admittedly it's all been rather woolly so far, isn't right. Can you pin down exactly what would keep investors happy, make them feel more confident?
That's a tough one. Personally, it doesn't matter. See, I'm a trader. I don't really care about that kind of stuff. I go with what if I see an opportunity to make money, I go with that. So for most traders, it's not about we don't really care that much how they're going to fix the economy, how they're going to fix the whole situation. Our job is to make money from it. And personally, I've been dreaming of this moment for 3 years. I have a confession, which is I go to bed every night, I dream of another recession. I dream of another moment like this. Why? Because people don't seem to maybe remember, but the 30s depression, the depression in the 30s, wasn't just about a market crash. There were some people who were prepared to make money from that crash. And I think anybody can do that. It isn't just for some people in the elite. Anybody can actually make money. It's an opportunity. When the market crashes, when the euro and the big stock markets crash, if you know what to do, if you have the right plan to set up, you can make a lot of money from this. For example, hedging strategies is one. Then investing in bonds, treasury bonds, that sort of stuff.
If you could see the people around me, jaws have collectively dropped at what you've just said. I mean, we appreciate your candour, however, it doesn't help the rest of us, does it, or the rest of the Eurozone?
I would say this, listen, I would say this to everybody who's watching this. This economic crisis is like a cancer. If you just wait and wait thinking this is going to go away, just like a cancer, it's going to grow and it's going to be too late. What I would say to everybody is get prepared. This is not a time right now to wishful thinking the government is going to sort things out. The governments don't rule the world. Goldman Sachs rules the world. Goldman Sachs does not care about this rescue package, neither does the big funds. So actually, what I would actually tell people, I want to help people. People can make money from this. It isn't just traders. What they need to do is learn about how to make money from a downward market. The first thing people should do is protect their assets, protect what they have. Because in less than 12 months, my prediction is the savings of millions of people is going to vanish. And this is just the beginning. So I would say be prepared and act now. The biggest risk people can take right now is not acting.
Alessio Rastani, thank you very much for talking to us.
Do you dream about the economy at night?
I try not to.
Yeah.
Nightmares.
18 minutes past 11.
Thanks, Aaron. Two thoughts for viewers before we go. One, first take a look at the only stock up this much, Radio Shack, RSH. That company coming out with earnings up 12%. You got to look hard to find a stock like that today because right now the Dow is off 342 points. We just saw it jump from 298 to 342. A big plunge, and let's hand it off right now to the closing bell. They're following it for you. Let's send it off to Maria and Dylan. A global sell-off spilling onto Wall Street today. The Dow Jones Industrial Average now down 462 points. We are seeing sharp declines across the board. Concerns about China's growth outlook putting investors on edge. The Dow and the S&P 500 giving back all of the gains in 2007. We are entering the final and most important hour of the trading day.
Well, hey, Maria, we're just looking. There's a gap lower, literally 180 points just added to the declines in the Dow Jones Industrial Average. You can hear the hollering on the floor. We're down 260. Right now, the indication is 471. I was just talking to some traders while you were summarizing the market, trying to figure out why there was such a significant gap lower again from the 260 level to now the 470 level on the Dow Jones Industrial Average in a matter and literally in a split second. The belief when you talk to the traders is, at first people thought it was a bad print, but again, it is holding now down 475 on the Dow Jones Industrial Average, which is starting to blow through the biggest decline that we saw right before the U.S. invaded Iraq in the spring of 2003. The belief right now off from the traders on the floor is that we Series of trades queued up, sell orders queuing up that were up against the trading curbs that had come into effect, that those curbs released, and now the market is extending itself, moving towards a 500-point decline. Going to the beginning of this story, it began in China. It was not a fundamental economic issue, but so much one about speculation in the stock market, Maria. Again, concerns that there was too much speculation. There's talk about legislation in China to reduce the ability to borrow money to invest into that stock market. We had the ripple around the world, 1 to 2%. But now we truly are extending. The Dow Jones Industrial Average now crossing 500 points, Maria, on the decline.
Yes, it is at 12,124 on the industrial average. We are watching this with this market sell off. Just spoke with one trader on one of the upside trading desks, and he tells me that there are programs really that are kicking in right now as we enter this final hour, and that is what is really accelerating things. Sell programs as we watch this market plunge. There is a tick by tick chart of what is going on right here, and as you see, it was just about 259 or so 3 minutes ago when the industrial average went from down just about 200 points to down 470, and then down another several points, and now down to 543 points lower. We are looking at worries over China's growth story. We know that we had a global sell-off overseas, and it was led by China, and the worries about an overheated situation there. This just one day after Alan Greenspan suggested that, in fact, we could at some point see a recession. Dylan's on the floor right now with Scott Wapner, taking a look at all of the sectors. And I would say, really, take a look at the financial services group, Scott, and Dylan, and tell us what you see there in terms of the leadership on the downside. Where's the volume as well?
The volume is across the board. I mean, we're at 500 points on the Dow Jones Industrial Average. Biggest decline since
September 17th, after 9/11. Let me point something out. We talked about the volume, 1.7 billion shares today. Look at the down volume. If you guys, I don't know if you can get a shot of this. If you turn, look at the down volume. Can you swing the camera up and look at that board? Look at the down volume compared to the up volume.
DVOL, that's where that is on that board. Right. Second column, if you're watching it, it says DVOL in 1.7 billion down trades.
One trader on the floor here told me earlier that in his 20 years on the floor, and this was before the losses accelerated to the levels there are now, he had never seen a spread like that. It's just amazing when you look at the up volume compared to the down volume to show you the momentum of the downside that we've seen today.
The interesting dynamic about this, and Maria, you would know this as well as anybody, having spent as many years as you have on the floor of the exchange. The China catalyst was a real catalyst for a real sell-off in China, if you talk to the traders, because it had to do with being able to borrow and leverage up to buy that market. The sell-off around the world was relatively moderate. 500 points on the Dow Jones Industrial Average, the biggest down day in percentage terms since we reopened this market after September 11th, is a reflection not of any economic cataclysm